Hey guys, it's Nasir here again. I want to share with you some interesting observations I've been making, and hopefully I'm going to trade some of these things. I'm going to look at crude oil today. Let's have a look at crude oil. So you see, back in 12 of March, crude oil dropped. It literally dropped from around 45 down to literally 30. And that was a bit of a shock because I've never seen it in my history. I've been trading since 1999, although I stopped after 2010. And then the last 10 years I've been following the markets. I've never seen something like this. So that sort of got me really curious, and I thought, oh, wait a minute, something's going on. So I need to look into this. So here's a chart. When that drop happened, you'll see a lot of lines here. I'll explain what these lines are along the way, but these lines are essentially support and resistance lines, and they've been sitting there in my account for many years. So these are lines from back in history. I'll show you exactly what I mean in a bit, but as you can see, oil just literally dropped. It just literally dropped. What I did was I zoomed out and looked at the last 6 years. You can see those same lines again. So these are key points where the price tends to sort of reverse, or the price tends to sort of hang around. So this level here we call the resistance, is another resistance. This is quite a strong resistance that has been holding itself for, say, the last 6 years, and this is quite a strong support level. But this time what's happened is it's dropped below that 40 support and went down to 30, which we saw last happen back in 2016. I remember in 2016 I was actually working for BPP University at the time as a financial markets trainer, and I was training a group of lawyers who were in the financial markets, and they needed to understand how commodities work and so on. So we did a lot of commodity trading simulation with them, and that was in 2006 when this happened. And one of the things that we discussed was that, hold on a minute, $30 for oil is just way too cheap. The world will need oil no matter what's happening. Yet there's a lot of move going into renewable energy, but oil will still be needed simply because of industrialization, and it's not about to run out anytime soon, to be honest, contrary to what they tend to say. And interestingly enough, if we just look at that period, oil did, oops, I've just lost track. Oil did reverse from that and started to climb back up. So that was quite a sizable increase actually, and obviously over the years it increased a lot more. So it literally increased from 30 all the way to around 50. So that's quite a sizable increase. At that time, one thing I said to the lawyers that I was training, we did some paper trading, and I said to these guys, take down this trade, oil, take it up to 60 if you can. Give it at least 1 year. If you could stretch it out to 2 years, stretch it out to 2 years. And I left that with them. So hopefully they've got a nice little surprise in terms of what we saw. I mean, I'm not saying that I'm right and I always get it right. I get it wrong a lot. Hey, that's why I lost my job back in 2009 and so on. Because we failed and the market surprised us, it shocked us, and we went bust. But anyways, that's what happened with oil, and now we've got another situation where oil has come down 6 years later, not even 6 years later, really 4 years later. Oil has come down to 30 again. So while I was doing that, I thought, let me zoom out a bit more, let me look at the bigger picture of what's happening, and I find something interesting. I look at the weekly basis for the last 29 years, and interestingly enough, oil's been swinging around in the long term quite a lot, and as you can see, there's a pattern forming here. It's what we call a descending triangle in technical analysis, and usually the price gets squeezed so much into a narrow range that eventually it pops out into a certain direction. Now this is over the long term, so it's not going to give you a huge change in price overnight. This is literally, it's going to take a good few years or a number of months for it to sort of show the effect of this descending triangle pattern. We'll talk more about this technical analysis later on. And one of the notes I made here was expect oil to bounce back up from 30, but I remember when I did this analysis, I gave a call to a few of my trader friends who are still in the markets, one particular guy is an oil trader, and I asked him, what do you think? Could it drop down to 20? How could a severely collapsing market drag oil down to 20? And that looked really unrealistic to me, to be honest, because I thought 30 was bad enough as it is. And the shocking thing is, oil has dropped down to 20. So let's look at the chart today, what it looks like. So that was in 12 March, so that was a short while ago. Let's have a look at the chart today, what it looks like. Okay, so here's my oil chart. I'm just going to go into weekly. And I'm going to zoom out. So as you can see, my lines, these support resistances are still showing. Again, these are support resistance lines that I set quite a long time ago. And as you can see, the price sort of seems to respect those lines. And again, these lines are based on supply and demand and what do you call it? Let's call it investor intuition, or what investors think a certain commodity or asset or instrument is worth. And what you can see here is we were looking at 30 being a support. Worst case, there's support close to 20, and it has literally fallen to $20 a barrel at the moment, which is insanely low for oil. So as you can see, there was a lot of activity around the $20 mark back in the days, and we're talking pre-2000, back in those days. Do you see? And then we had this huge spike running up to 2008. I remember when oil was at 140. Oh my god, that was insane. But then it just collapsed. But anyways, 20 was a standard back in the days, probably not the best standard at the moment, and as you can see, it looks like a bit of an anomaly. The price has literally popped below that support to hit 20, which is the bigger picture, the longer term support. So I would suspect the price will sort of think of it as an elastic band. It's going to pop back into the range, so it should jump back into the $30 mark range, 30 to 40 dollars. Again, it's not going to happen instantly, but I've got a strong feeling based on my experiences over the years that this will pop back into the range, $30 to $40 range. And based on that, because the price is extremely low and oil will always be needed, I'm very tempted to trade this actually. I mean, let's think about it. At the moment, because of the coronavirus, the world has shut down, economies have shut down. Let's see, airlines aren't moving, the shipping industry isn't moving, even vehicles all over the world. You and I are not even driving our cars because we're on lockdown. A lot of industrialization has stopped, so a lot of dependency on oil has stopped. So yeah, it's understandable the demand for oil will go down momentarily, but this situation is not going to last forever. As soon as industrialization gets back on its feet, as soon as the airlines get back on, as soon as the shipping companies get back on, that said, oil is just going to jump back up. And again, I can't be sure how far it will jump back up, but I can be pretty confident that it's going to jump back into the range $30 to $40. So now I'm just wondering if I could buy oil now and sell it when it's somewhere between 30 to 40. I think I can make a healthy profit. So yeah, I promise that I'm going to do a little bit of trading, even though I haven't done it for the last 10 years, and I'm just going to jump in now actually with a small account, £10,000 account. Let's see what happens over the coming weeks and months, and I'll keep you guys updated what happens.